I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who were involved with Real Estate IQ,
Hey, everybody. Welcome. It's another Thursday here. And we are around middle of February now. Hopefully your deals have been going great. We're seeing an increased amount of deal flows and an increase in foreclosure as well. So we'd love to hear about, how your deal pipeline is going and, how your deals are going. Let's get started. So, an introduction for our host organization, Real Estate IQ. We are your end-to-end solution for deal finding and real estate investments. All right. Our most popular core product is the distressed sellers, where you get the freshest data that are mined daily. And then now you can consistently using these new leads to do marketing. And we have seen a lot of success in the, turning these kind of pretty much cold leads, right? Cold and distressed sellers, turning them into warm leads and hot leads, all the way to signed contracts. And it has led to a lot of, and continue to lead to a lot of success to our clients. Here's our new website, where we share our real estate intelligence and breaking news. So if you visit here on a regular basis, you're gonna see, new market updates listed on here pretty much on a regular basis. Okay, it's refreshed every week right now. Successful clients, right? Consistent source for distressed sellers, targeted list, consistent flow of leads. And Brian made 10,000, and he has since joined our Deal Accelerator program, and he's about to put a house under contract very soon. I think hopefully today. Daryl put 4 deals together and about $1 million in contract. And Salvador made 30,000 in his first deal. Jordan made 60K in 2 deals. First deal was 55,000, and the second deal only 5,000. Ismail made, I think he has made a lot more than that, but he wants to stay humble and only kind of showcase this 80,000. And Homero, kind of biggest number, $100,000 in his first 6 months. So you can join them too, join our list of successful clients. I think, from a marketing standpoint, what you want to establish is a system that can consistently bring deals to you, bring warm leads and good conversations to you. There's going to be distressed sellers that don't want to sell at all. And there are folks that have thought about it and they are ready to sell. And so you want to consistently kind of have good, high quality conversations. And when you have a consistent deal flow, you will feel much better too in your individual conversations with these motivated sellers. Okay, and then for this particular deal maker's life, we're showcasing our some case studies, right? Share with you how some of the deals are going, and then we'll also be sharing some educational information too. So everything we share here is for educational purposes only, and we don't offer investment, financial, or legal advice. And if you need help, kind of working on some leads or closing on the deals, you can send them to me or text them to me, and I can give you some pointers on how to proceed. So for our agenda today, we have our welcome introduction, and then we'll have our market updates and case studies, and then we'll invite John, Mr. John Huang here, our Dr. John Huang, up here to share some feature topics, and then we'll share with you some upcoming events. So first of all, some housing update. We are seeing housing starts have rebounded. It has the December housing start numbers have beat the expectation. Actually, the forecast was 1.3 million, and in December there were 1.4 million actual housing starts. And we're also seeing an increase in building permits as well. So what that means is that we are seeing an increase of housing supply back into the market. And as we know, there has been a shortage of inventory in housing, and so this is just some economic forces that attempts to kind of balance on this shortage. And for unemployment, we are seeing the folks that initially claimed benefits have fell by about 20,000 to 206,000. And in Texas, housing prices have been flat to modestly up so far in 2026. And statewide, we see a median home price to be a little bit over 1.3% in terms of pricing growth, and that translates to about 334,000 as a median price, according to the Texas A&M. In terms of foreclosures, we see the numbers are rising, but it's still normalizing. So in December, we see that the foreclosures have gone down, but over year, we are still up by 32%. Okay, so lots of opportunities out there, and we're seeing that too. And I think from a real estate investor standpoint, a lot of times you don't really need a lot of deals, right? We're just looking for that 1 or 2 deals a month, and that could turn into a lot of success for us for that month. And so just kind of looking for that 1 or 2 great deals. So in terms of deals update, this is a pre-foreclosure lead in DFW, kind of close to the Lake Dallas area. And as you can see, the house is basically upside down. They owe $330,000. The market value is $335,000, and actually if you kind of account for the reinstatement fee, they're already upside down. Now this is a case where we either let go to foreclosure, work on a short sale, or we see if we can do a short-term rental or wrap. But either case, we'll need to work on forbearance and move the reinstatement to the end of the loan. And when we can do that, we'll be able to structure a deal that can make sense as an investment property. So that's a deal we're working on right now. No major repairs. Looks to be in good shape. It's just the numbers are not very favorable to the seller, and the foreclosure is happening in schedule for March. And just to share with you a deal's progress, this is a property in Mahia. And what's interesting about this property is it required quite a bit of rehab, $106,000 of rehab. And but the income potential is very interesting. So the main house is a 3x3, and it has an office, a den, and a formal dining, and also a huge living room. So the plan here is for the main house is to break it down into 2 units, a 3x3 and a 1x1. So basically add a new bathroom there, and a new kitchen. So that's 2. It's got turned into 2 income producing units. And then on this side, so this is the main house here on this right side. And then in the middle, you have carports and then a backyard. And then on this side, there's actually more building in the structure. So there is a 2 stories apartment building along with a garage that is attached to this apartment building. So kind of first step right now is getting the 2 apartments, first floor and the second floor leased out. They're almost ready now. So that adds 2 more units to the rental. And then the detached garage can be a 1 to 2 units. Okay, so that's another 1 to 2 units, and it's gonna require a build out. So that's not our focus right now. We're just gonna focus on the main house and the 2 apartments and get them leased. And then there's also on the other side of the house, which we can't see, is a mobile home that is quite old. Once you move it out, the city doesn't want you to put it back. So we're looking at potentially rehabbing or remodeling the model home so that it is it can be a living unit, or potentially take that out and use the land. And there's additional land behind the mobile home to build some multifamily. So there's some interesting opportunities here. So kind of first step again is to do the get the units kind of ready to live in and get them leased out, and then start working on a refinance, right? Get out of the short-term loan, and then the opportunity would be building out the additional garage area, and also using the land to build multifamily. So very interesting, very creative opportunity here for this unit. And we're seeing, I think the city of Mahia is going to add about 300 jobs in that area. And so there's some interesting potential by building and providing housing in this area. If you want to get in the game, you can either directly get into the deals, right? We have the deals program that we offer, the leads and the deals program. And also, if you're interested in kind of the participate through deals opportunities, that's where the private funding network can potentially play out for you. So you just need to scan this QR code or call Randy and find out more about how you can participate. And in terms of featured deals, we have this sub-2 in Waco. This is best for a wrap. And you can read about the details and the numbers here. If you want to learn more, see the photos and whatnot, you can scan this QR code and chat with us more. There's also another deal here, also a sub-2 opportunity. We're seeing more sub-2 this year. And this is a opportunity about 30 minutes from Austin. This house in particular has, you might be curious, what's the catch? The catch is the property had some deferred maintenance in terms of, they start seeing mold in the house and they go, is it the roof leaking? And it turns out to be the AC dripping and backing up, and that's kind of causing leaks. So we're estimating that repair in the worst case is probably going to be about $50,000, probably less than that. And then, some paint and flooring. So this is also a very interesting opportunity here because the numbers look pretty decent from a sub-2 perspective. So there are more deals, whether you're in fix and flip or you're looking for buy and hold opportunities. So, for anybody that's actively looking for deals, these are some, ongoing opportunities you can take advantage of. All you have to do is to, when you scan this QR code, it's going to take you to a form, and it's going to ask about your investment experience and kind of and what kind of deals you're looking for, and then we'll match you with the deals that fit your buy box. And if you want to have access to more deals like this and really start scaling your marketing pipeline and deals, we have a deal accelerator program where we offer one-on-one support to kind of walk you through how you can start doing deals on a consistent basis. Okay, lots of track record here. And speaking of getting a consistent amount of deals, as I was sharing earlier, you need to have a consistent pipeline of leads, and that's what this particular offer is about. We have our February promotion, and you just need to scan the QR code to have a set of consistent off-market distressed sellers, and this is updated on basically on a daily basis. And so every day you get a set number of leads that you can do marketing to. And I find it, it's kind of basic. It's quite foundational in terms of building your marketing system and your marketing pipeline. If you don't have leads, you can't get started. So you need the lead to keep moving forward. You can talk to our consultants by scanning this QR code. So now I think it's time for us to introduce our partner, Dr. John Huang here. Let me add you on stage. John is a great friend of mine, and he recently just got his PhD. Congratulations, John. And we always love listening to you sharing your knowledge. And so great to have you here, and welcome. The stage is yours.
Absolutely. Thank you. Thank you, Steve. Thank you, everybody. Get a chance. We every week, we spend a little bit of time and talk about a market, think about investment. That is so precious. We Real Estate IQ, we initiated this platform not just to get the deals and make some money and have our own good life, right? We wanted to spread the gospels and all the blessings, and we wanted you to benefit from each other's companionship. So as 2 months, not updating the market, but now we're ready, starting from last week, right, Steve? And we're excited. We're excited to share the deals and share the updates and feed you with the information that is essential. It's not about grabbing information because you got AI, you got Google, you got all the tools. But what is essential for your business, for your personal gain or business gain? That's important, right? We filtered the essential, all the information that is related to investment, and then I decided to pick certain topics to update you on a weekly basis. And I'm in charge of that, as Steve is in charge of the deals update, which is also, more than essential, is paramount, right? Because if you can join those deals, you can get a cut pretty soon as 10 days. And no matter then, what experience level you have, right? And we have a coaches, Tamara, Steve, himself, and all available to help you with the deals. But all right, I'm gonna jump into my portion and buckle your seatbelt, because there are interesting market movements that you should be aware of, and also some interesting product updates as well. So as usual, I would like to remind you, from investment perspective, it's always important to keep in check of what is the golden triangle. Okay, the golden triangle is not forged by us. It's a financial concept that has been existing ever since there are tradings and stock markets and everything. Okay, so it's dependent on cash flow. Okay, cash flow requirements of your family or yours individually, and return, right? You can call it ROI, right? Return, and then safety of your money, right? You want it to be safe, or you want it to take a risk as a 20-year-old. That's between these three. Then your choice of investment will be determined largely. Of course, there is the emotional factor and also a market performances that we're going to talk about, right? Let me say that again. This is the principle, okay? The investment principle. But there is also an emotional factor, and in a second I'm going to talk about. And plus, there is the last one, which is the market movement, okay? So between these three, principal market movements, you can narrow down what you need to do with your money, and for a long term, for a short term, or even for at this moment, right? Again, I want to repeat the disclaimer. This is by all means educational purposes, not for investment advisory purpose. Even though Stephen and I, we both have a lot of a license. If you're really truly interested in the specific topic, we will need to take it offline according to the FINRA, SEC, and Texas, Office of Insurance, and all that requirements. Okay, so between the return, cash flow, or liquidity and the safety, how do we play this out? Well, it depends on the age, right? And what is purpose of yours. If you wanted to produce cash flow, let's say example number one, you want to produce, cash flow, and you want a good, Sorry, my doctor is calling me. I'll call them back. Your investment to be on the left edge of this triangle. What is this, right? You want a great cash flow, then the money should be readily available for you and your family. And return, higher return, that will be, derivatives, stock, and mutual funds, right? So, we can pretty much conclusively say that if you want to go to return the cash flow, you want to stay on stock, okay? But there is a lot of risk because there is no safety. You want to do mutual funds, right? And maybe you want to do some of the kind of risky derivatives like REITs and other options and derivative products, okay, and options, okay, and margins. And if you don't know these concepts, then don't worry about it, okay. But if you would like to have good return and the safety, and you don't care about the cash flow, which means you have enough cash flow from incomes of your paychecks and overtimes, all that, then you probably want to consider real estate investment, or some noble metal investments, right? I mean, that's going to give you return and the safety and collateral, basically. But if you care about the cash flow and the safety, you want the money to be available at any time for emergency purposes, and in the meantime, you don't want to lose any money. Okay, buckle your seatbelt. Here are the options. Bonds, municipal bonds, okay, and bond mutual funds, okay, bond funds we call them, and you can consider life insurance as an option. And this is the permanent life insurance as an option for good cash flow and for safety. And also, as a matter of fact, life insurance would be a good choice for return and safety as well, because on an annual basis, averagely, they would give you 7% returns, which is astonishing, right? Because bond returns is around 3% to 4%. Stock, it varies, right? On average, is about 7% to 10%. So life insurance is actually a good choice. Another one I would bring to your attention is that if you want a safety and you want a return, cash flow is not an issue. Annuity is going to be a huge benefit to you as a supplement investment vehicle. Okay, on average, they can give you 4 to turn. I mean, it's very safe. The money always go back. Okay, and that's what we call a collateral investment, right? And also, annuity would give you a kind of a lifetime income, just as your pension and 401ks. Well, not 401k, I'm sorry, Social Security. Where is the 401k? Well, 401k, interesting enough, is actually on the risky investment. So on return and cash flow, because you can borrow the money out, right? Annuity, you can also cash out 10%, but that's not a focus. You want a return and a safety. Annuity is a great choice, right? Second, I'm going to give you some examples. But anyway, so that's the grand scheme of investment principles that you can consider. And emotional ride, as happened last week. Last week, if you were with us, you probably heard me doing the predictions and forecastings, right? And we were on Thursday, and I forecasted what was the movement of Friday, which turned out to be true. I said Friday the market will go up. Well, if you listen and you put your money into option or something, you probably make money. That's a joke, by the way. It's not an investment advisory. And I predicted that on Tuesday, the market would drop, right? And it turned out it was true. Okay. So let's look at what's going on in the last Friday and then the past Tuesday just happened this week. Is that because Monday was a holiday? The Monday was a holiday. Oh, thank you, Albie. So Monday was a holiday. It's a national holiday. Okay, it's not those crazy holidays that people call themselves holiday, right? But this is a legitimate national holiday. So before holiday, usually, oh, by the way, 14th was a Saturday too. It's a lot of spendings, everything, right? So in combination, the institutions would like to put in the trades, okay? Based on the forecasts of the numbers and everything, they put in trades. A lot of trades go into the market. So, more movements, more activities mean more market up tipping. So that's why the forecast of the Friday on Thursday, last Thursday, we said is going to go up. Yeah, it did go up. But usually there will be an adjustment. Last week we said, Tuesday or Wednesday, if Friday goes up, Tuesday or Wednesday is going to go down. If a Friday goes down, Tuesday or Wednesday is going to go up, right? So what happened? We forecasted that a Friday is going to go up, and then Tuesday, Wednesday is going to go down, and it turned out exactly like that. So you just need to know kind of the principles and some of the gimmicks. This is every Thursday we teach you a little bit, share a little bit of experience. Hopefully, in 3 months or 6 months, you get that kind of a sense too, right? So so this past Tuesday, they're talking about manufacturing survey, and they also had the building confidence index come out from Tuesday. Okay, and it was not that pretty. Okay, because it was forecasted to be 10%, 10, and then 38. It actually went down. That's why Tuesday it triggers the market down, right? It's a little bit upsetting. But if you look at the Wednesday, the economic numbers, the forecast so let's look at this. Okay, hold on. So if you look at the Wednesday, actually the market start moving to a better direction because of the forecasts from the economic numbers. It actually turned out to be relatively positive, relatively. Okay, so this is emotional driven, and we're going to show you the chart where the emotions is. But hold on for a second, just to look at the number. So for instance, the housing starts was supposed to go up to only 1.31 million, but actual number is 1.32. So that is a huge kind of a excitement. Okay, you see this one, and then the building permits was a little bit upsetting. Okay, in fact, it was a big upsetting. It was forecasted to be 1.4, drop from 1.41, and it turned out to be 1.39. So that is a big kind of a energy draw. Okay, so mixed message. This is up, this is down. The housing starts, actually it was a huge number. Okay, instead of a 1.3, it actually went 1.4. Okay, in a second, we're going to talk about building permits and then the housing starts. What does that mean for the market and for you as a wholesaler? And also for the building permits, actually, it went up 1.45. Okay, so what's the difference? The building permits, there are two types of building permits: the overall building permits and then the building permits for the residentials. Okay. So overall, the building permits actually went up significantly, and I will show you the number. The goods, durable goods orders, instead of going down negative, is actually positive. So it was a positive sign. And then transportations actually went up significantly, and all other numbers actually were positive or stuff flat, except for only one, which is the building permits. Okay. And that permits is the current permits, right? We can delve into the details later on, but let's look at the market. Okay, so based on that, Let's look at the market. So 18th was yesterday. That's Wednesday, as you can see. From Tuesday down, because of the numbers kind of a roll out, and then there's the drop, right? The drop, and then the numbers go up, right? And then if you look at the lines, let's look at the lines. This line, as I said, this is a consumer reactions to the market, consumer emotion line. It's called a zebra edge, New York Stock Exchange zebra edge line. If it is on the positive side, for the long run, the market will go up. Okay, it will go up. And if you look at the, just as of this morning, and we're going to look at why this morning the market was kind of adjusting from Wednesday, and we're going to look at the numbers. All right, it was dropping this morning. Okay, so let's take a look. So a lot of the numbers, if you look at what's going on, from the announcement, 7:30, the trade deficit is going negative. That means American, and then the jobless claim is actually positive. Okay, it's good sign. But every Thursday they announce this number. But the trade deficit actually went more negative. Do you know what that means? It means what? U.S. spent more money for importation than exportation, and the tariffs and all that also included. Okay, the manufacturing survey went up. Okay, went up. That means manufacturing in U.S. is actually a positive direction that we're heading towards. The trade balancing goods, advanced trade balancing goods, so that actually went up. It's a good and a bad in a mix, because if we are increasing the tariffs and everything, and our manufacturing is not catching up on the speed, then we ended up we'll have to place more orders overseas, right? And also the pending home sales actually, look at this. This is where the big negative is. Okay, is this one? It's going very negative, very negative. It was forecasted to go up, but actually it went down pretty bad. The leading economic index is actually flat. Okay, so let's look at the tomorrow's forecast. The numbers. The tomorrow number is actually GDP. It was forecasted to be down. Instead of 4.4, is a 2.5. So this is a energy draw, is a down draw. And the personal income is going down. It's a flat. I would say it wouldn't trigger the market performance that much. And the personal spending is relatively flat and down. And also other pricing indexes are kind of going up and flat. So a little bit of up. It wouldn't change that much. Okay. And also the core price indexes is going up a little bit, and then going up a little bit year over year. It wouldn't trigger that much of a reactions in the market. So tomorrow, we can safely say that, by the way, I forgot that new home sales is a forecast to go up. Okay, but we're going to look at the numbers. We're going to look at the numbers, and we can forecast the market together here at this room. So from the predictions perspective, right, it's not much of a change. But let's look at what's going to happen in the actual numbers tomorrow when they announce it, 7:30 to 8:30 tomorrow morning. Okay, so we're going to do a little bit of forecasting here. All right, I hope you're ready. I hope you're ready. Okay, let's look at that. All right. Before that, let's look at the next week. Next week, not much to mention. It's a pretty light week. Pretty light week, except for a Friday announcement. Okay, so the market, because of it's a light, the trading will be relatively light. Trading is light. That means the market is not that hot. Okay, so we anticipated that next week is going to be a relatively flat week. Okay, not much of an excitement. Not much of an excitement. Tuesday maybe a little bit, but not much. Friday, tomorrow, let's look at the actual numbers, and we're going to do some forecast. So if truly as they predicted, as the economists predicted, right, the market will be flat and a little bit down, okay? But if the actual numbers is exciting, then tomorrow will go up. So in general, our forecast is tomorrow is going to be a flat, okay, because it's already down since yesterday, right? And then next week is going to be a flat week. Okay, not much of excitement. Now let's look at the commodities. Commodity, which is interesting, right? This is the last week. This is the last week we announced. We look at this is this week, as of today. Okay, what did you see? Well, there were quite a bit red, and this week quite a bit of green, And what is a quite a bit? What is a green? If you look at the commodity numbers last week, we look at the UK gas and the TTF gas. This week is increasing dramatically. Okay, dramatically increasing. And also another is on the bottom of the German gas and the Urasol gas. It also went up. So overall, everything related to gas, oil is going up. You know why? Come on, last week we mentioned about it. Anybody? All right, I'm going to save the time because it's my time, right? Because the negotiation that is going on turned out to be relatively positive. Maybe there's no war, right? But every time we see, the air carriers and all that moving into the Persian Gulf area, and the Persian, all these Iranians uprising and all that stuff is going to drop the oil prices, right? But it's going to raise the oil prices, and then the change is going to go negative. People don't think this is good, but now because of it is good, so more exportations, more transportations, logistics, and positive market side. Less military, more positive on the market. That's why. Okay. So it depends on the negotiations continues. So watch the political news on the negotiation results, and you can predict on the commodities. Let's look at the gold, right? Well, negotiating, there's no war, right? There's no war. The U.S. dollar is going to be strong. Strong U.S. dollar, gold is going to go down, and silver is going to go down. Silver has already dropped dramatically, right? Right now it's $77 from $120. It dropped a lot, right? It's still going down. Gold is still going down. Platinum is still going down. Remember, gold and silver, yes, is driven by and copper is driven by the economics, consumers, but it's more driven by what? It's driven by chips, missiles, manufacturing. Okay, that was last week. But look at this week, right? Dramatically changed. It's going up. It's going positive now. Gold is going positive, and the silver is going positive. And what's going on here? And also, if you look at the lithium is still on the positive side, and then the iron side, and iron is actually increasing. Increasingly going down quite a bit. Okay, so what is going on? You would think, we already said the negotiation will drive down, but the negotiation didn't reach the total agreement, and then there is a coming back, is a drawing on the stability of U.S. dollars a little bit. Okay, so last week the forecast of the negotiation and U.S. dollar was that it's going to go strong, but then this week, you all know, just 2 days ago, the third the striking USS striking fleet just being sent to Gulf area. That is drawing a little bit, is drawing some attentions on the U.S. currency stability. Okay, so the forecast was, hey, the no war negotiations going up, so everything go down, right? And then the third fleet being sent to the Gulf area, then the panic starts a little bit. Stock market usually don't react so dramatically to that, but a commodity does. Commodity does, like when we look at the oils and all that. Okay. Now let's look at the specific numbers on the U.S. Treasury notes. Treasury notes is tipping up a little bit. Okay. U.S. dollar, if USD goes strong, the yield will go down. Okay. If the USD go weak, then the yield will go up. And if you look at it last week, since last week, everything is positive. Okay, the yield for short term or long term, everything is positive. That means what? U.S. dollar is going weak. So again, when U.S. dollar is going weak, based on these yield numbers, you can predict the gold price. Okay, that's just a tip for you, right? All right, the mortgage rate is actually went down since last week. Okay, this is triggered by the yield and the bank interest, of course. So it's dropping a little bit. Okay, dropping a little bit, and all other numbers has some changes. Like 15-year mortgage rate is dropping to 5.5, 5.44. For those who don't know, maybe I should mention a little bit. The new home sales is still going extremely strong. Okay, and we're going to explain in a second. Pretty much regarding related to the mortgage rate, regarding the building permits, and then the housing starts. Right, you got to watch that area. The existing home sales, we're going to look at the curve, and it's down dramatically. Okay, very down. Existing home sales is down dramatically. Okay, and we're going to look at the curve, and then you can see it much better. Home sales, the home price index, is relatively flat, and then the home sales index year over year is relatively flat. So that means the home sales is not going up; the price is still going down. In Texas, Steve already mentioned actually our newsletter, and let me pull up the newsletter for just a glance. Right, we have a Word document version, a PDF document to talk about the market performances, the pricing, and this chart is talking about the metro price cut that is going now with the Houston, Austin, San Antonio, and the DFW area. Long-term rental, whether you should consider long-term rental at this point or you should hold off, right? Those are the charts that were produced to help investors. And we also have a PDF version. Where's my PDF version? Okay, it's somehow here. Here. This is the PDF version of a presentation. So if you have a team, you wanted to use our newsletter to make a presentation to your investment partners or teams, this is the presentation that you can use. You can leverage, right? 15 pages, very, very visually pleasant and telling. So you can leverage this. We also included our wholesale strategy and playbook in the newsletter, and also this PDF document you can leverage. Okay, so for you, if you have a team, we want to educate you and build you up so you can use the information to convince your investors and to talk to your investment partners to pull up the new strategies, necessary strategies. Okay, hopefully that makes sense. Okay, so that's what you use. Building permits. Actually, remember last week we talked, it's a lagging indicator. It's always a 3 months of lagging. So finally the number came out. It was a huge number. It's a much bigger number than expected. If you look at this, right, it's already doubled the building permits in 2016, 2017, almost doubled in 2017. Although it's only half of the 2021, 2022, but it is too much. Okay, If you look at all these building permits that have been issued since 2021, we have more building permits issued in the last 4 or 5 years, 6 years than the previous long time range. What does that mean, my friends? That means we have a lot of builders put their money in, betting on building new houses and making a lot of money. And guess what? That triggers that a lot of building, even residential building permits, it was skyrocketing in December. From a negative to a skyrocketing big time. So what does that mean? That means a lot of a house will start, new house, okay? New building, new house will start, okay? And December, the number is dramatic. It was huge. Okay, so what does that indicate? My friends, that indicate that the existing home sales is going to struggle, continue to struggle because of the pricing and because of how many new houses are built to compete with the existing home. Okay, for instance, the mortgage is still on, 6 point something percent, and a lot of people are applying for the mortgage initiation. If you see this number, that means a lot of people are applying, but are they getting the mortgage? A lot of people don't get the mortgage. Okay. If they apply for the mortgage on their own and try to buy existing home. However, the builders, the construction or the constructors, they actually reduce their mortgage rate to about 3%, 4%, make it really affordable, and they facilitate the mortgage applications. So when the people buy new home through builders, they get approved for lower mortgage rates and get approval rates up. What does that mean? Is it easy for individual families to buy new homes or existing home? Well, the answer is ding, 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 new homes. Okay, so new home sales went up. New home sales is doing extremely well. Okay, this is new home sales because of the mortgage rate, mortgage application approval rate, and because of the incentivization from the builders. Why? Well, because of the builders have a lot of new homes built and they couldn't sell them. The inventory is huge, all right? And this will permeate through the next 6 months to even a year. Okay, so what does that mean for a wholesaler or home investment, the existing home investors? Well, it's your opportunity. Okay, why, John? You just said existing home is hard to sell. Yes, that's exactly the point. Because most of the consumers, they can't get mortgage approved on time, and their down payment is very limited available, and they couldn't get the home, a existing home sale approved within 3 months to 6 months. So the existing homes or the homeowners, they're stuck with their house. They couldn't sell. And averagely, tomorrow, we're actually going to have our, open house, talk about the market performances. Okay, you should be there at 11 o'clock. We're going to talk about each metro area, the wholesale status, right? You should really sign up and then go over there and take a look. So it's a lot of struggling. The home sales, the day on market, on average, is about 91 days. Okay, that means the existing homes have been put on the market for 200 days, for a year, they couldn't sell them. So if you're the wholesaler, you knock on the door, you have a great chance, not only negotiating the pricing down, but also get them up, to let you to do the listings. So as a real estate IQ, Steve probably didn't mention about it. We actually do listings for you. Okay, we do listings for existing homes. So when Steve mentioned about those deals, they're real deals. We actually have the notes on our hands. Okay, if you join us, you sign the deals with us, and you can represent those deals and turn around and sell them. Okay, and we have a great pricing because we have our strategies, map deals or substitute deals, and we have a homeowner sponsored, owner sponsored deals. Okay, so make sure you pay attention to what Steve already talked about, or if you don't remember, just reach out to him. All right. The existing home sales. Look at this number. Look at this number. Did I just say the existing home sales is struggling? Absolutely. From December 2025, the numbers were still doing well, but starting from 2026, it's just a low. You can't put it off. Okay, it's just struggling. And overall, since 2023, the existing home sales is just struggling. 2025 in particular, home price is dropping, as you all foresaw, right? It's still dropping since last year. We started this, the broadcast and all these announcements, right? And price to rent ratio. Now, what does that mean? If I pay a house versus I rent a house, which one is more economical? Well, buying a house, you are paying 134% more than renting a home. Wow, that's a lot. Yes, that's a lot. So people prefer to rent home. Okay, and because of the existing homes, the existing homes can be sold, and a lot of them get converted into long-term rentals because of the restriction on the Airbnb. So they become long-term rentals. Okay, so long-term rental market is really, really struggling, and we have in our newsletter the long-term rental strategies, and then the and what you need to consider if you got a long-term rental homes or you decided to do that. Okay, it's in our newsletter, and you should pay attention to. Okay, all right. The total housing inventory, as we said, the inventory is humongous. Okay, is a lot. Given the building permits being approved and in the hands of the constructors, this is going to continue to go up. The existing home inventory, total home inventory, is that a good? No, it's not good. Okay, it's not good. It's good for the renters, for people who rent homes, right? Leasing homes, it's good. But for homeowners and investors, it's not that positive sign. However, if you are able to leverage those wholesale strategies, you're going to be able to beat down the price and get the homes at the desirable rates. Then you should be able to lease them out in a reasonable price range, compete with the homeowners renting. Okay. All right. Consumer confidence is still tipping up since last year. Okay, and it's a good sign. It's a really good sign. This is the overall market. Okay, so we don't have time to go through the details, but yeah, just do a snapshot. If you're interested in knowing the detail, you can scan a barcode that Steve just provided, or let us know. We can have a sidebar conversations and look at what your existing investment strategies and the portfolios and give you suggestions, right? And that's going to be an advisory level, right? And we don't charge anything, by the way. I don't know if we mentioned that enough. We don't charge anything. We actually believe in splitting the deals, share the profit together, then charge you on advisories or financial recommendations or tax advisories. Now, layoff. Last week we announced the numbers, and the number didn't change much, but this is the same. A lot of layoffs is going on in telecom industry, in consumer industry, IT industry is going strong on layoff, and yeah. So watch out. Okay, watch out. That means what? Well, as a wholesaler, it's evil to say you want more layoffs, but no, we don't want to say that. You want the distressed market. You prefer the market to be distressed enough that the homeowners is willing to sell the house or pre-foreclosures or tax liens and all that, right? Or code violations. And that's what our offer markets leads are mined by our own engineers and the technicians, right? We go onto the Conti website and dig out the numbers, and then to figure out what the trend and provide those leads to you, right? You definitely want to take advantage of that. That's our subscription programs. Okay, the last, if not the least, is I want to mention this for the next few weeks or a few months, is that April the 15th is the deadline for you to take advantage of some existing promotions that is only in Roth IRA, SEP IRA, solo 401k. So if you are individual, you haven't put your Roth IRA in for last year, that's $7,000, and this year's $7,000. So if you're 50-year-old above, that's $8,000 for each year, right? That's a $16,000. You would be able to qualify for all these promotions, right? If you're a business owner, your solo 401k, your SEP IRA can take up to 25% of your profit, right? Your revenue, and you can put them into the IRA, defer the tax, and take advantage of these offerings, these promotion offerings. Okay, and don't wait. All right, these offerings, I'm mentioning them because they are principal protected, meaning whatever the amount of money you put in there, you never lose value of it, and your beneficiary will take it, or you will be able to take it. And the strategies that put here in these investments, they actually beat the market. I don't want to use the word guaranteed, but they beat the market because you never lose money. You only go up for extended period of time. But there's only one downside I should have put on the slides, is actually it's annuity based. Okay, the only downside is that you got to put it in there in 5 years or 7 years or 10 years. Okay, that's the only downside. Okay, other than that, it's definitely very competitive to your 401ks and the existing IRAs, which demand your investment skills in understanding the mutual funds, stocks. Okay, all right. So wait a second. What is the promotion? Well, watch this. This company in the middle. Okay, if you put money in, let's say $10,000, they will give you 50% bonus on the first day, which is $5,000. So if you have existing IRAs, Roth IRA, whatever, you can roll them over as well. Okay, so not only starting with the cash, you can also do rollovers for mutual funds and all that to take advantage of the 50% of bonus. And what else for this product? This company also offered a interest bonus. So if the market go up year to year by 3%, you will get 6%. Okay, that is huge. Another benefit for this offering is that there is no fee, no cost whatsoever associated with it. You get your principal protected, you beat the market, you get a huge bonus, and you got an interest bonus. And whatever the money that grows, you can use it for a lifetime income. Okay, lifetime income till the person pass away, or leave it to the beneficiary. The second one is I want to mention is another bonus based. This one, it started off with $25,000. Okay, and roll over your existing IRA, whatever is going to be good, or you can roll over your 401k to do that. They give you 30% bonus. What is most attractive for this one is that they give you 9.5 compound interest, guaranteed compound interest for 10 years to 15 years. Okay, that's a lot. Okay, compound interest 9.5. You can't get that from stock market, 401ks, or anywhere, right? Nobody will promise that, but this one that promised 9.5. The only downside is you got to put the money into there for 10 years. Okay, and if you're not cash flow short, this is a great product. But anyway, there is a little fee, 1.1% fee associated with it, but it's already beating the 401k plans. Okay, folks, with that said, folks, the market scan update is over. And I encourage you to contact Steve and myself for joining in the deals or getting more insights on these mentions, right? And I wish you a blessed week ahead. Enjoy your weekend with the families. And we'll see you next week. Enjoy deals. Enjoy great profits that is coming your direction to receive the blessing. All right. With that said, everyone, have a good weekend. Have a good day. God bless you. Bye-bye. Bye, Steve, everyone. Bye.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.